Good morning, AxiTraders. I'm Greg McKenna. Welcome to Markets Morning. It's the 15th of December 2017. 10 days till Christmas. Fantastic. Santa Claus didn't come last night, though, for stock traders with some concerns about the US tax plan hitting the market and hitting it hard. The S&P 500 ended up closing down about 0.4% at 2652, and that, when you look at it, and I'll leave that screen up there for you. This is the S&P. You can see there. I'm not blowing myself up. I'm on the road today, so I'm using the webcam embedded in the laptop rather than the normal one. So, but what you can see there is you can see a real turn, like dollar yen a couple of days back when we talked about it. Those 2 days of trade were suggestive of something to come, and we got that. When I posted earlier this morning for my Markets Morning piece on the blog, the S&P had not fallen out of bed like that, but that is a warning sign. Now, when you look at the local market, you can see that big reversal back inside the range there too. Now, why am I starting off with stocks and not doing my normal currency thing? Because stocks are important. Once again, that's the train line. I'm sorry about that. Once again, the DAX has reversed back inside its trend channel. The Nikkei back inside its box as well as the DAX. The Dow Jones, that's a reversal. And my favorite market timer just put out a sell signal for the NASDAQ. That doesn't mean you go short, but for him, it means that you take money off the table. So these are just things to watch as we head in. It would be mad for the Republicans not to pass the tax legislation, given where they are in the electoral cycle, given this is their one chance potentially in a decade or so to control both houses of Parliament. But Marco Rubio from Florida, Mark Lee from Utah, and potentially Susan Collins from Maine are a little bit worried about the focus being on the wealthy and the wealthy to the expense of everybody else. Back on the S&P 500, we can draw that trend line there. That will be the level to watch. We respect these trend lines unless or until they break, as you know. But if in CFD terms, 2642 gives way, we might see something. Of course, as I say, it'd be mad for the Republicans not to pass this tax bill. So we'll see what happens. Moving to currencies now, and it was a big night for central banks. The ECB last night said that it is going to maintain rates, and Mario Draghi talked about growth and inflation expectations, which were both upgraded. That's quite positive. The time for emergency measures from the ECB are clearly past. But the ECB, like the Bank of Japan, like the RBA, like most central banks, do not want their currency to get too strong too fast. And so Mario Draghi really stressed this notion that by 2020, that the inflation rate in Europe will only be 1.7%. So euro's off a little bit, 1.1773 at the moment. The key thing here is that the euro should be substantially lower, given that this emerging divergence between where the Fed is going and what the ECB is going to do. But traders don't believe in the Fed at the moment. They don't believe in growth. But think about what we've had this week. We've had CPI, headline CPI at 0.4. Now, I know everyone likes to take off core and say the Fed looks at it and those kind of things, but humans, businesses, live in a nominal world. 0.4, 2.2% year on year, that's a good number. Last night's retail sales, likewise, 0.8% for the month of November. October was upgraded from 0.2% to 0.5%. That's a really strong outcome, and one that, when you put the CPI and the retail sales together, prompted the Atlanta Fed to increase, or at least the model, to increase the expectations for Q4 GDP to 3.3%. Now, if that is what we get next year when that data actually drops, that's going to be two really strong above 3% quarters. That's going to reinforce that the Fed is in fact going to raise rates 3 times next year. Now, one of the things that people said yesterday was that the two dissenters meant that there were other dissenters and that they'd done it on behalf of other people. Seriously, that's just ridiculous. If that was the case, would the dot plot have actually increased? Would the dot plot be looking for 3 hikes next year? Of course not. So that's a ridiculous notion, but it hasn't stopped people not believing in the US dollar. So much not believing in the US dollar, and that's the Mexican peso, which I often do, don't I? I'm sorry about that. Dollar yen. Dollar yen has broken down and through that trend line, proving once again that if the most important things on charts are trend lines, down and through the trend line, off its low, like oil, which we'll get to in a sec, and probably gone a little bit too far, a little bit too fast. Pardon me. Dollar yen would need to drop down through that low to get down to the 110.80. The bottom of this range, which is where I think it's headed when I look at that chart. Perhaps not today, perhaps not tomorrow, but certainly it looks like it's headed that way. We've got the Tenkan out today in Japan, which is likely to be a good number. Sterling managed, regardless of the the defeat of Theresa May in the Commons the night before. Sterling managed to hold most of its 2-day rally. My sense is though that it too is heading down. That's my position. The Aussie rallied hard over the past few days. I've just done a detailed piece and outlook for the Aussie on the blog. Have a look at that. What we've got at the moment is we've got a 2.15 roughly percent rally in the Aussie since the low of Monday morning. It closes the week last week at 75.04. The low this week was 75.00. It's been up to 76.79. I confess that I thought it might have run to 77 or 77.30 yesterday after that 61,600 increase in employment that we saw for the month of November, but it hasn't. One of the reasons, I think, is the proximity of this 200-day moving average, which is flat, so it's not trending, but that's there at 76.91. That's a handbrake. What we've seen this week is we've seen that the sellers have backed off. That's given the Aussie a chance to rally. That with the increase in the price of copper. And just think, 293, 295, all the way up to this morning, I think at 305, 307, depending on whether you look at it in MT4 terms. Why don't we look at it in MT4 terms? Whether you look at it in MT4 terms or the futures, 307. So that is a pretty good recovery. Now that recovery and the recovery in base metals more broadly has helped the Aussie dollar increase in a material manner. This 77.30 region for me is going to be pretty decent resistance. 200-day moving average is always important for assets, but 77.30 to me is the big one. It was previously support, and then it broke through. Market went up and retested it as resistance. So that for me is actually the level to watch. So we'll keep an eye on that. 76.05.15 looks to be support. We might have to head down there given the rate of change or the pace at which the Aussie rallied. Dollar CAD still in its box. Governor Pollers was quite hawkish last night, saying that the caution does not mean doing nothing. Now, that's something that we might think about for other central banks as we head into 2018, and particularly for the RBA as we head into 2018. And if the data flows as they and I expect, I'm still keeping an eye on consumers, but employment and the growth of employment really does assuage the issues and the concerns that we have for households in Australia. But as it stands at the moment, dollar CAD in the box, it's building momentum. If you get a break, it will run. Oil last night, that's gold. Well, let's talk about gold while we're here. Coming back to test resistance, failed at the moment. It got up to a high last night of 12.59, just below the 12.60 level. That's currently a failure. It could go, if 12.60 goes, you could get another $20 pretty quickly in gold. Why is gold managing to rally right at the moment? It's because the US dollar is weak, and also because interest rates, bonds don't believe in the Fed. 235 for the 2-year, 235 for the 10-year, 181 for the 2-year, and the curve continues to flatten. The US dollar bears want to believe not the Fed, not the data, but the yield curve. I think that's madness. Anyway, moving over to WTI, the IEA, which is the Paris-based organisation, not to be confused with the US organisation, the EIA. The IEA came out last night and again took a pop at OPEC, basically saying that they disagree with OPEC's outlook about the supply and demand balance next year, and saying that they see supply outstripping demand. Really important. What we saw WTI fall and then rally back. 57.13 at the moment, 57.17, 20 I think was the high, and so that's up 1%. Brent is up 1.5 odd percent on the back of lingering concerns. And equally, if I draw a channel here, you can see that perhaps folks were interested. I'm short WTI, or I was short WTI. I'm not now. I was short WTI, and my take profit was just a little too low. So I missed out on that trade, but got out this morning when it was still in the 56s when I got to my desk. Anyway, so that's largely it for me today. 10.5 minutes, that'll probably do you. Not a lot out today. Tankin in Japan's probably the main one for me. And then we head into this last week where liquidity of the month before the holiday period before Christmas, the following Monday, and so things will get a little bit thin next week, so keep an eye on that. But in the meantime, have a great weekend. On behalf of the team at AxiTrader, I want to wish you all the best. Apologies for the video quality today. It's just that I'm on the road and I've left my webcam in the drawer at the office, and the other one is at home on the desk, so I'll remedy that over the weekend. Bye for now.